Hey everyone, welcome back to the Tax Show for People Who Owe. I'm Dave.
And I'm Phil.
And today we're very excited about what time of year it is, Phil. What time of year is it?
4th of July?
Well, summer, barbecues, and on 4th of July, as you mentioned, I was wearing my Uncle Sam hat. You may have seen some of these around at some of the block parties and barbecues you attended. And Phil, why is Uncle Sam happy this time of year? Do you know?
I think he's happy because more than 80% of taxpayers have filed and paid their taxes on time.
This is a show for who?
Taxpayers who owe.
Taxpayers who owe. So we're going to focus on the rest. Let's see, maybe some of the 80 or so percent that have paid and filed and have filer's remorse. Phil, they may not know that they can go back, or they may have regrets of that money they paid to the IRS and file their return. What can these folks do if they have any question about what they've already filed and perhaps paid?
Right. I think the most important thing is people don't want to pay $1 more or $1 less than the taxes that they actually owe. And luckily for you, you have the opportunity to amend your tax return as many times as you want within the 3-year statute.
All right. So Phil, would you advise that taxpayers who filed, you said they can amend as many times as they would like. Would you advise that they do that 5, 10 times to get the best return?
Well, hopefully you get it right on the first amendment. And every subsequent amendment means another person has to review and process that return, meaning your chances of audit will likely go up.
Or AI.
Or AI.
Could be reviewing, maybe not a person. Anyway, so I think it's important that we hone in on the 20% of folks that haven't filed. They're facing a decision as to what they do when they file. What is a major decision that most taxpayers who owe will have to, or any taxpayer will have to make when they file that return?
The number one question we get is, should I itemize or take the standard deduction?
What is the difference?
That's a great question. The difference is an itemized deduction requires you to list out every expense that's allowable on the Schedule A. Whereas a standard deduction is something you get without question, right? You don't have to list how much you spend on unreimbursed medical expenses, charity, or things like that. You get $14,600, at least for the 2024 tax season.
So that is just a line item. You can just take that deduction instead of going through the nitty gritty of all your box of receipts.
Absolutely. It's check the box, is set it and forget it.
All right. So I'm assuming, based on that the itemized is more at risk for audit. Safe to say?
Safe to say. For every itemized deduction you list on there, IRS assumes that you're keeping good books and records.
Not the shoebox. Well, perhaps. And so let's focus on what we get often here at Optima. Because we represent taxpayers who typically owe when they file, none of those folks want to owe $1 or pay $1 more than they have to. Is that fair to say?
Absolutely.
So what is a major question we get often when somebody enrolls for our service?
What can you do to reduce my tax bill?
And quite often they think that's by us filing an OIC. And while we file a ton of OICs, the tax return is a gold mine for potential savings. Tell us how.
Absolutely, David. As part of our process, we make sure that we look at every filed and unfiled return to make sure that we leave no savings on the table.
Okay. For example, if a taxpayer filed using the standard deduction, we may ask them to go get that shoebox from the garage and find potential savings. Clean up the mess.
Absolutely. We do this for every single year, as long as it's within the refund statute.
And some of those boxes are pretty messy, Phil.
And pretty old.
So we'll look under every rock to make sure we find all the savings for our customers, the legal savings they're allowed. Phil, what are some other reasons that we may amend a return or a taxpayer may want to amend a return?
Great question, David. This is a sneaky one because by summertime, sometimes employers or other contractors haven't issued all your wage information, and you might find a new envelope in the mail saying you earn another $10,000 of income, which is taxable. But luckily for our clients, we take a proactive approach and make sure we amend returns to include any missing income so that they can avoid the 20% underreporting penalty.
Yes. I was going to ask him, and why is that important to do it first? Right? And what is the letter you want? I thought you were going to say the letter you will get if the IRS finds it first.
If they find it first, you can expect a CP 2000.
2000. And there's also an episode on that. If you'd like to know what a CP 2000 is. It's not a letter you want to get. So if you do receive an unwelcome letter, or if you're suffering from post-filing remorse, feel free to call Optima. We'd be glad to help you. Phil, I think that wraps up the show today. Any last parting words?
As usual, do something. Now you know you have the right to amend. The time to amend is today.
Yes. Thank you for joining us today, everyone. We'll see you next time. Hey, everyone. Thank you for watching today. Please be sure to like
and subscribe.
so you're up to date with all the information you need when you're taking on the IRS.
And as always, do something.